Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City, and I am here to bring you the May 5th, 2023 market wrap-up for the just concluded week. All right, so let me tell you what we're going to be doing here today. We are going to be looking at the market wrap for the last week. We'll be looking at the broad market indexes, the SPY and the Qs, as well as the Russell 2000. We'll also see where the bond market is with respect to that. We'll also look at that in the context of both the just concluded week as well as the last rolling month of 4 to 5 weeks. Okay. After that, we'll kind of do a little sector breakdown and identify points of relative strength and weakness, and we'll see where the various sectors are in terms of that continuum. And then lastly, we'll look at look and identify some key levels for the SPY and the Qs. And then we'll also take a look at some levels in some other popular symbols that lots of our subscribers and just traders in general tend to look at. So that's kind of the game plan here. Before I go on, of course, there is the ubiquitous disclaimer: Precision Trading Labs, everything that we're presenting here is for informational and educational purposes only. We are not financial advisors or risk managers or anything along those lines. So everything is presented again in the context of information and education. All right. So let's take a look at everything. So here is the last week. And so we're looking at the three major market indexes here, and then of course we also have the TLT here for the 20-year, the longer term bonds. And so we can see obviously at the end of the week, not a whole lot of activity, particularly with the Qs pretty much finished flat, and then the SPY and the Russell 2000 down fractionally, less than 1%, and the bond market was down about 1.5%. Okay, and this actually kind of continues sort of a range-bound period that we've had for about the last, I guess, 3 weeks or so, if not longer. But if we just go back even the prior week here, so here was last week's snapshot, and this was the week ending of April 28th. We can see that the Qs were up a little less than 2%. The S&P was up about 1%, and the Russell 2000 was about 1.5%. So again, relatively narrow range of activity. And then if we go back even one further week, I mean, that's just obviously a real dead one, where the S&P was virtually flat, and the Russell and the Qs were up and down fractionally, basically up like 0.5%. So you can see we're obviously in this kind of very narrow trading range at the moment. Okay, and in terms of the sectors, this is where we were last week. So we can see that the transports were basically up about 2.5%. Energy is really kind of the only major, really the only major sector that exhibited kind of really significant activity. And energy kind of basically slammed down about actually really 8% at its low. It recovered a bit to finish down about 6% for the week. And this is after kind of some weeks prior, where it was actually kind of the high flyer. For a number of weeks, it was actually the best performing one, kind of sitting up here. But on a percent change chart, you can see now this is down about 6%. Also, just for clarity here, this is the 0 point for this chart. So this is last Friday's close. And so the percent change is measured from this point on. So this is our 0 line here. Okay, and so these are all the various sectors, and so we can see again the transports are the ones that was up for the week, energy, and then less severely but still down, communications and the financials, and then kind of this cluster here. I refer to these as the between sectors, because these are all kind of like they're sort of clustered in that sort of middle range there. And of course, as one would expect, that's where the S&P, of course, would sit. That's that big blue dot there. That's the SPY. Okay, so that's again the middle, and then that's the relative strength sector, and then these are the relative weak sectors here. Okay, so that's for the week that just concluded. If we broaden the time lens out to the rolling month, we will then see that energy has now, by virtue of that really kind of bad week that it had last week, as well as a negative week the prior week, from being the high flyer, it's now actually sitting now on the rolling month basis down at the bottom, along with retail. Retail has been actually, weak for quite a while due to, inflation fears and, inflation and consumer, lack of consumer confidence and fear about, and so the consumer is kind of reining some spending in. And so anyway, retail has kind of has been weak for quite some time. And now energy, at least on the rolling month basis, has now joined it. Okay. So that's where we kind of sit relation to this. One thing I did notice before actually going to the live charts here was if we look at the top three there, consumer staples, health, and utilities, some might be, and I actually did happen to notice this, that, we've actually been in for the last week, and for the last month or so, maybe actually the last 6 or 7 weeks. If we look at the live chart, which we're going to go to in a few seconds, we've actually put on about, let's say, 8 or 9% from the lows that occurred during March, during the onset of the regional bank crisis that occurred in the kind of, let's say, mid-March or so. Since those lows got put in, we've actually been kind of more or less, we put on, about 8 or 9%. And so a little complacency has kind of come into the market. But one thing I did notice here was, if you look at the strong sectors here, staples, health, and utilities, and if you kind of ever look at or think about sort of a model that sort of, looking at sector rotation and where one is with respect to the economy and all that sort of kind of stuff, you will see that in terms of those sectors that I just talked about, consumer staples, healthcare, and utilities, these are all kind of the sectors that happen to perform and sort of are exhibiting relative strength in the context of generally a weak market. And you can see right there that kind of a bear market. Now, I'm not suggesting that we are anywhere there at all, but it is interesting to see that the ones that seem to be performing best now are the ones that are kind of showing, in the context of a weak market, there is that. And this is actually also kind of illustrated even better when you look at this next slide here, right here. And again, there's healthcare, staples, utilities. And again, that's sort of in the context of economic contraction. So one should sort of keep that in mind, that, even if the market is going up, just to sort of keep that tucked in the back of your head there, that, that might mean something. Now, again, just to keep it in context, though, we've been actually sort of, as I showed you in the prior slide here, we've actually been traveling in sort of a very narrow range with respect to the market. You can see these, so all of these numbers have been generated in the context of sort of a sideways market, or at least a narrowly moving market for the last 3 or 4 weeks. So one should just keep that in mind, that as much as, we look at this and want to think about it, it is still in the context of a kind of a relatively narrow range. Even if we look at right here, this is the last rolling month, and we can see this is up anywhere from 3 to 3.5% up here, and basically down about 3 or 3.5% on the downside. So this is all in the context of a narrow range. So what I was just showing you with respect to these sectors, it's less significant here because you're not dealing with really, showing something that's up 10, 12, 15% on the upside or down a similar amount on the downside. It's kind of on a very, very narrow range. So as a result, one should only put so much, give so much credence to what I was just telling you about the sector rotation thing. But nonetheless, it is something that one should at least keep in mind in terms of helping to manage expectations, or if nothing else, not to be too surprised when and if other things happen. And of course, the things that we're, of course, waiting on with respect to sort of macro stuff is obviously the balancing act that the Federal Reserve is going through with respect to monetary policy and trying to, kind of try to rein in inflation. So of course, they're doing that typical balancing act of raising interest rates on the same token, and trying to not drive the economy into a recession. And that's, kind of that typical balancing act. And you may have heard the term a soft landing. And then what they're trying to do is to try to come up with a soft landing for the economy that will not drive us into a recession, but at the same time arrest inflation. Okay, needless to say, that's really crucial. And so everyone's going to be kind of looking at that. The other thing, of course, we're all looking at are the lunatics in Congress. And are they going to basically drive us into a default? Because of the fact that they, at least one side of the aisle wants to basically say that we don't have to pay our debts. It's one thing to talk about not spending more in the future, but then of course we have the debts that we've already accrued and that essentially are on our credit card, and they're essentially threatening to hold that hostage. They do that, and all bets are off. You're going to see some really violent market volatility. So of course everyone's being mindful of that. So those are the various things that we kind of have to watch out for. So anyway, that's the story there. If we actually go to now take a look at a couple of the charts here that we actually share with our subscribers, and what we actually showed in some of these videos that I did the last couple of weeks. This was a level on the SPY, okay, and so this was done on the 21st. So this was 2 weeks ago, and so when we put this up here, this showed that this was an area right here. What we did was we plotted various supply and demand zones. Okay, these zones are, and I have a little annotation here. This is a level of demand right here, where price kind of consolidates, and then notice there's a gap, and then it kind of there's a major price swing up, and it doesn't spend a whole lot of time here. Okay, so this is where supply and demand for shares within a relatively narrow price range, they are in balance. Okay, then they go out of balance. Okay, and essentially what happens right here is that there is an exhaustion of sellers. So the sellers essentially leave the building, and what happens is buyers have to run up the price chart until they encounter willing sellers. And then when they do that, that's when trading essentially can start to resume. Okay, so that's that whole concept of supply and demand. Okay, similarly, right here at this level, the same thing again was exhibited here. Price more or less goes sideways. And then if I blow this up here, we can see there's a gap, a very bullish candle, and this is all in the context of a 2-hour chart. Then there's a pause, then there's another very bullish candle, and then it kind of goes a bit, and then ultimately then it kind of starts to head back down again. One of the things that we'll do is when we create these areas of supply and demand is we compare the dimensions of the boundaries of a demand zone that's here, okay, with the distance that price actually moves. And to some degree, this helps us to determine what expectation we might have. Because what we're looking for then is we're looking for price to return to this level, okay, and I have signified by this arrow. We're waiting for retracement back to this level in order to then get into a trade that's long, that's essentially expressing a bullish trade out of this level, which is, you can see it at the 404 mark, right? So we're waiting for price to pull back to this level, and then we could express a trade by either, buying the underlying symbol, the SPY, or buying calls on the SPY, or of course, any one of a number of option spreads. Most simply buying a bull call vertical spread, where one would buy a call, which we refer to as the anchor of the position, and then you would sell a call that's above it at some distance, and that reduces the premium on the for the position, and then it also changes the dynamics of the trade in terms of the options Greeks. Makes it essentially a kind of a less responsive, more forgiving trade. That would be the point of using it, and as well as a cheaper trade in terms of premium. And that's why one would do a bull call or vertical spread there. So at any rate, this is what we share with our subscribers. And so again, this was an area where essentially this was a demand zone. The supply and demand were in balance here. And then once the supply of shares at this level left, all that was left here was demand. That's what we refer to this as a demand zone. That's what we refer to that as a demand zone. And then up here, this is a supply zone. Okay, it's the exact opposite narrative, where price drops out of here, Okay, so it's supply and demand were in balance here. Okay, but then there's an exhaustion of buyers in this case. Okay, now we ended up not trading this because we don't like all that preceding trading there. So this is not a trade that we would have taken here. But nonetheless, and we can see, it did react to this, but this now has become more of an area of resistance rather than an area of, this was an area of resistance at that point, not really a clean area of supply. On the other hand, both of these we regard as clean areas of supply. So this is what we were looking at 2 weeks ago. So if we now look at what transpired, here's what happened, the chart from the wrap up of last week. And we can see right during that week at some point, price in fact did dip and actually kind of kissed the front of this zone. And then we got this really, really nice move up. So this was an awesome trade that the number of us and our subscribers got off of this last week. Okay, and again, one could do that again by buying calls or doing a bull call vertical spread. Okay, so that's what we were looking at last week. And then if we actually go to the live chart now, and we take a look to see where we are on the live. So here's what we were just looking at right here. Okay, that I just showed you on the prior slide. Here's where we were now. Here's the live chart here. And so this was last Thursday. And then this is the end of the week that just concluded here on Friday. So again, same thing again. We ended up with another pullback here. And again, the same exact narrative. And then we got a nice pop on Friday. And so again, and a lot of us decided not to stay in this trade until over the weekend. So we kind of just cut this short. This was a real nice move for one day between the gap and the bullish move and the bullish follow up during the day. Okay, and the reason we actually like this trade, in fact, let me blow this up a little here. If we kind of look over here, we can see in the chart here, I've actually plotted in here the lower Bollinger Band, okay, on the daily chart. So even though we're looking at a 2-hour chart here, 130 minutes, okay, these are actually the Bollinger Bands based on the daily chart. Okay, so one should, and most of you hopefully are aware that you can plot in a chart. Even if you're looking at one time frame, you can actually plot an indicator or an oscillator that's based on a different time frame. So even though this is a 2-hour chart, these Bollinger Bands are actually based on the daily. Okay, and so one of the things that I really liked about this setup when I kind of shared this and talked about this with people is there was this overlap between this quality demand zone here, as well as the lower daily Bollinger Band that was right there. Okay, and so as a result, we're always kind of looking for this confluence and this sort of overlap of various trading signals, because that oftentimes acts as an odds enhancer. First and foremost, we're looking at these demand zones or supply zones, but then when we see other things that kind of overlap with it, that kind of generally acts as an odds enhancer. And so we can see on the trade that happened the week before, at the end of the week, the prior week, that was nice because you could see the Bollinger Band was sitting there. And then more or less the Bollinger Band kind of flattened out during last week. And so again, you can see price was more or less, the Bollinger Band was kind of sitting more or less right at the front door of this demand zone. And so again, when this price came down here, we had the demand zone going for it. We had the sort of that price was being very stretched to the downside. And again, we got that nice pop out of there. So for all the above reasons, we kind of really like that. All right. So where are we now? So I'm going to spread this out a little here. So here's where we are at current price on the SPY. So right here, okay, again, there's nothing going on here. I had these lines here, but now there's nothing really going on. So the next kind of clean area of supply is this area right here. This is a 2-hour chart. Price drops, goes sideways, a massive gap down, and then, and then of course it doesn't really go all that far, but then it kind of loops back and then sort of then really starts to head down after a couple of days. Okay, so this is not the greatest of zones. Nonetheless, we are going to keep an eye on it. And so where we are now is that's about 2% away. Okay, so price is sitting now at 412 and change. This is now sitting up here. This level is about 2% away. Okay, and then above that, there's a daily demand zone there. and that's this one here. So we took this and we bumped up the time frame on this chart from a 2-hour to a daily. This would obviously clean up a lot nicer. But anyway, this is a daily demand zone up here as opposed to this one, which is a daily supply zone up here, as opposed to this 2-hour supply zone. And then if price would get up there, that would represent a little over a 3% move from where we are. So of course, these are both eminently reachable, this week or early this week or whatever. So these are two zones on the in terms of expressing a bearish trade that we're going to be looking at here. And again, this level is probably a little less interesting than this level. So I'm probably at the end of the day going to be more patient and just wait for this daily supply zone up here. Okay, on the underneath, looking at a demand zone in order to then express a bullish trade. Again, we're going to move, conceivably might go back to the well on this one again. And the reason for that is, again, we'll see what the lower Bollinger Band is, if and when it comes back here. But the other thing is, again, and I showed you this a minute or two ago. If we blow this up one more time, we'll see. Okay, when price came back, it just kissed these levels, almost imperceptibly. Okay, if you're a sports fan and you ever heard a referee or a referee in either basketball or football, they'll oftentimes talk about incidental contact, of why they didn't call a foul or a penalty, or sometimes why they retract a foul or a penalty they may have previously called. And they'll often refer to as realizing that something was incidental contact as opposed to intentional contact. And so as a result, these were really intentional contact. It barely touched this level. So consequently, when the price comes back, this level may in fact work yet another time. So we're going to keep an eye on that. Probably when it comes back, might be inclined to sort of look to see, is it going to drive into the level in reverse and do what's referred to as a confirmation entry. But we'll see what happens. Anyway, this is about 2% down from where we are in terms of current price. Okay. Then there's another level here. I'm still evaluating this, but this is another place that I'm sort of going to be looking at here. And I'm part of why I'm intrigued by it. It's at the $400 round number. So in addition to price rallying, consolidating, and then rocketing out of there after a short amount of time and then going a reasonable distance out of there, it is sitting right at the $400 round number. And so, from behavioral finance standpoint, huge round numbers are oftentimes significant. So I'm going to keep an eye on that. But then right here, this is another kind of a daily or really a 2-hour level here. And this is kind of really the next kind of just really clean level that hasn't really been touched at all. And so as a result, that's about 4% down. So you can see we're kind of really range bound within this relatively narrow range. And we may stay, so it's quite possible we may stay in here for another week or so. On the other hand, we'll see what happens with, either the Fed chairman, if Jay Powell says something market moving, or of course the lunatics in Congress, decide to play Russian roulette with our the full faith and credit of the United States. We'll see what happens. But just from a pure chart perspective, that's where we're sitting on the SPY. Okay. If we turn to the Qs, so here we are on the Qs. Okay. So here's where we are now. I'm certainly I haven't plotted this out yet because it hasn't really moved, but this is a drop, a base, and then notice price starts to rally and go from there. This might in fact end up becoming a demand zone, particularly once price blows through here. Because typically what I want to do is I want to see a prior resistance violated. And then once we get a nice price swing through there, and then we have this tight area of consolidation that was preceding a very bullish move, well, all those things combined might in fact represent, give us the scenario for this to actually become a quality demand zone. But it's not there yet. But I have it circled here as an area of interest. Okay, right here, this was an area of demand. Price drove through here, more or less came in here, paused, came back, and then rocketed out of here. This is all spent. There's nothing to see here anymore. Right here, there was something to see, but you can see right there. Okay, we're kind of done with that because this red candle kind of drove all the way through this. So now what we're waiting for are the levels below. And I'm not in love with this at all because this is lower probability because of all of this trading that happened right before. Okay, but notice though, price did come in here, base, and then rallied out of there again after a short amount of time. But because something similar happened here, price came up, went sideways, and then rallied. It was kind of a sloppy demand zone to start. And then this again, because price, and then it came back. So this is an area that I'm just sort of looking at as more like almost like a sloppy area of support. This is really not a trade. This is not a tradable demand zone at all. So I'm not liking this. Okay. But what I am liking is this. Okay. Now, of course, for this to get there, you'd have to see another market smackdown here, because that's about an 8% move from where we are at current price. So, but nonetheless, this is a clear area of price rallying up, consolidating and if we actually look, we can see some very indecisive candles here that are kind of wicky in here. So this is really an area of consolidation. And notice these two very bullish candles. Okay, this one actually gaps down very slightly from this one, if you think about it. But nonetheless, at the end of the day, that's a very bullish candle, and both close pretty much at their highs. And of course, this one in particular, very, very, very bullish and very large. Okay, so anyway, that's that clean level of demand that's sitting there. So what we're looking at on the Qs again is this thing. If it happens, if we happen to get a move out of there, then this will likely become a quality good demand zone. And then on the above us in terms of supply, if we then go back in time, okay, this is actually kind of a similar picture to what we saw on the SPY. Okay, this is a daily supply zone there. And then again, so we're waiting for price to get up there. So this I think on the SPY, this was sitting about, what was it, about 2 or 3% up. This is about a little less than 2. So we can see that there's definitely going to be a ceiling that we're going to, at least a speed bump that when price kind of advances a little more, if it does, this might actually we can think of there's some major resistance that's going to be encountered somewhere, let's say in the 2 to 3% range above where we are now. Okay, so that's what we're looking at on the Qs. All right. And so the last thing we want to do is let's just check on a couple of other symbols that we typically like to monitor. And so let's take a look at Apple. Okay, so similar analysis here. So here's where we are with respect to current price, right there. Right down here, there's an area of demand. I'm a little concerned about that because of this preceding trading here. So again, I'm going to watch this, but I'm a little concerned about that. So I would probably end up, either passing on a setup here, or perhaps wait to see if we're going to, do what we refer to as a confirmation entry, where we wait to see if price drills into here, and then we wait, and then we set up an order so that we can then catch it on the way out, as opposed to having it hit the front line. The other thing, though, I might be looking at, in fact, I didn't mark it here, but if we think back to the Qs, there's that same level that we were seeing in the Qs. So in fact, this might, if we get a little more follow through, this conceivably might be a quality demand zone there. Again, I'd be a little concerned about the prior trading that happens right here, but we'll take a look at that. So this is actually another area of interest that I might be looking at. Okay, and then on the high side, in terms of finding an area of supply, okay, this was a prior area of supply, which in fact seems to be getting blown through here, even though this looked good at the time. Okay, so what we would then be looking for is what's the next one. Okay, and they're basically, this is an area up here, and in fact, I'm not really in love with that, and the reason for that is because that is what we just saw here is really a reaction to this. Okay, so this is not this was really the original area of supply up here. Okay, price actually came up here. Okay, drilled into there, and then you kind of had a little shot down there from about 179 to about 171. So that's about an 8-point move there. So I'm not in love with anything above here yet on Apple. So we'll kind of wait to see what happens with that. Like I said, here is going to be an area, and of course, if we get a pop out of here, then perhaps something over here will be. But at this point, there's nothing that really jumps out at me. Okay. The only thing that really jump out at me, in fact, no, actually, would be something like down here. And of course, that's a long way away. And frankly, I'm not rooting to get that trade. Actually, I could live without watching it get swatted down that much. All right. So anyway, that's the story with Apple. If we take a look at Google. So here's where we are. Actually, let some more data roll through here. But as soon as that loads, I'll show you back here. But anyway, there is a 2-hour demand zone right here. And that's about 4.5% up from here. And then below here, there's a real nice area of demand. However, that's a long way down. That's about 13.5. That's about 13.5% down. Oh, excuse me. Actually, that moved from there. Sorry about that. Fix that. So that's about 11. That's about an 11.5% move from where current price is to down to here. Okay. We'll see again, like the other charts, there might be an area of interest right here. If in fact we get a pop out of here, this could turn into a demand zone. Right now, it's just an area of consolidation. So there's no demand there until something proves that there is demand there. So, but again, that's really the first area of kind of clean demand that's not in a really tiny time frame here. Right here, this was an area where we had a prior area, and in fact, this was all a prior area of demand. Notice also, if we look at the axis to the right, notice that's sitting at around the $100 mark. So this was in the vicinity of a major round number, and you could see essentially that major round number, sort of in addition to the chart formation, essentially from a behavioral finance perspective, looks like it might have actually contributed some support to this. I would never claim that, just because there's a round number there, but it's something I certainly keep an eye on. But more importantly, I want to see, where is what's the candle structure here? Okay. So anyway, so that's the deal with Google here. And again, this is a long way down there. We take a look at, let's say, Amazon. Okay. So here's Amazon. There's really nothing that I like in this chart until basically you got more or less 10% up and 10% down. There's that kind of similar level that we just saw in the Google chart that's kind of sitting there in the Amazon chart. Okay, so there's that. One thing I did notice, though, that was interesting from the perspective of Amazon here. If we take a look at the where earnings announcements are, let me show you something that's actually kind of interesting here. So if we notice right here, this was an area of what I think of this pink zone here. This is an area of what I would think of as resistance. Okay, so notice price came down here, okay, and then there was a major drop here. Notice that price then came back here again, dropped out of there, and then notice that it came back here yet again and dropped out of here. And some people, of course, may consider this to be a kind of a triple top. But if the one thing that did sort of catch my eye, and this doesn't help us in the very short term, but it is something to watch out for when the time comes, is this, which is kind of interesting. Okay, notice we had this area. Okay, so now this area was essentially nothing at the time. Okay, but notice then there was this major gap down, and that cross there, that signifies the last earnings announcement. Okay, so notice price then gap down there out of this little area of consolidation. Okay, and so at that point, okay, that's just one isolated data point. Doesn't really mean a whole lot, right? So then it comes back here again, drills into this zone, and then you immediately have, this is the next earnings announcement. Okay, so this is the announcement that occurred on or about the beginning of February. Okay, and then notice that price drops out of there, and that's the day of that earnings announcement, and it drops out of there. And then notice now again, a few days ago, or let's say this is what is that, April 27th. So that's about 2 weeks ago. Price again came up, got to the front door of this level, earnings announcement right there. There's the cross, immediately drops out. And so what I'm going to do is I'm just going to make a note and say, okay, we have this common pattern of kind of a zone of really kind of resistance. And let's just see, where we are at the time. Now, if we go above that, then all bets are off. But on the other hand, if we kind of sort of waffle in here and we end up in this territory again, that's just something to kind of watch out for. This is an area of resistance here. And then again, 3 times in a row. And again, three is not a big number in terms of a data, in terms of sample size. But nonetheless, the last 3 earnings announcements, price kind of dropped out of this area of resistance. So it is kind of something worth, kind of at least interesting to look at. And so again, that is so that's the story with Amazon. And I guess the last one we'll take a look at is Tesla. And we'll spread that out a little. And so here's where we are with respect to Tesla. Again, nothing that really catches my eye in the short term. Obviously, this could obviously move, but this is where we are now. Up here is kind of the next area of supply, and that's kind of more or less. This is kind of more like a daily zone here. In fact, if I change this to a daily here, so we can see right there, price kind of comes up here, consolidates, drops out of there. There again was an earnings announcement. So again, that's an area of supply where we would be looking to perhaps to express a short trade or express a bearish trade. And then down here, this would be an area of where I might be looking to, and again, this is a long way down. This is 14%, but this is probably like the next clean area where I would be looking to express a bullish trade. There is right here in the 2-hour chart, if we go back to that, this is an area where, essentially price dropped, consolidated. Notice we have a bullish candle, another bullish candle. And so price kind of, pops out of here. It's not really a spectacular move. So it's really even at its best, this is sort of a mediocre area of demand. Okay. But then on top of it, just to go back, I'm not in love with the fact that we sort of have this sort of area right here that more or less is kind of reminiscent of what this is, where there's a pop, where this is an area of upward price pressure. So I'm not in love with this here because of this preceding trade. So, out of the symbols we just looked at, I think there were, a couple where we have, kind of, something immediate and something that I'm enthusiastic about. And then these other ones that just aren't, there just isn't that. And as we always tell our subscribers, not every chart has an actionable setup. So, just because, in fact, the harder you have to work at a setup, generally the worse it is, at least from our experience. So generally the setups that kind of tend to work really well for us are the ones that more or less kind of jump out at us, according to our rules. So at any rate, that's what I got. So I hope you found this all interesting and informative. If you did, I'd be grateful if you would please give us a like in YouTube, subscribe to our channel, as well as take a look at, if you look at the entry where you found this video, you'll find a link where you can actually schedule a call with either myself or my partner, Ryan Nocera. And we'd be happy to tell you a little bit more about Precision Trading Labs, what we do with our subscribers, as well as, take a look at a couple of charts with you and be interested to hear about how you trade, as well as to share how our core methodology works. All right, again, so anyway, there you go. Thank you very much for your attention. I appreciate the privilege of your time, and I will see you next time. Take care.